Want my latest market insights? My latest report, Market is Getting Nervous, is now available. Scan this QR code or click on the link in the description. Basically, market's going to open. We have a 5% move in Nvidia within the expected range. Not a surprise. I still don't have high expectations we're going to get above this 200 level with ease. But I do think the QQQ is going to be a nice little short here. Remember this bounce up into potential 613? Well, we're hitting it pretty much this morning. So we're still making these nice big moves. And I think this bounce into 613 also on the weekly, the daily, etc., is likely to be met with some resistance. We're having our little bounce here, and I think that that is expected. As you know, I had already posted, Jason identified lots of bullish moves up until about 200 where it gets sold. I have no doubts that they were going to beat. In fact, it was a beat raise. Blackwell sales are off the charts and cloud GPUs are sold, etc., etc. But again, there is a bearish side of this argument that we're going to dig into a little bit more, but not right now. So this is what I said last week. SNDK was very extended. Time to do a little bit of a reversion to the mean. It was pretty much the only space that hadn't in the AI ecosystem. Data centers came back in too. So uranium, not just the $0 club plays. So anyway, this did come back down to 240. Now it needs to break, and it looks like it's trying to. So I would say obviously the 21-day is coming into view, but you've got 226 it needs to break in order to see some lower levels. If you want to buy it lower, wouldn't surprise me if it came all the way back down to 168, but not all at once. So the 613 is a little bit of timely resistance as VIX is literally on that 1929 and it's doing exactly what I expected at 10 o'clock. So that's it. We gapped up and now we can gap and crap, which is kind of what happens with these moves. It had double the duty here of, well, one, Trump finally had to sign the Epstein files. We'll see if they get delivered in 30 days and how heavily redacted, etc. And two, we've got the payroll data for September out, less bad than feared, even if 2 months were negative growth revisions. And of course, Nvidia. And you saw my post, hopefully you saw my post last night on this. Lots and lots and lots of beat, raise talk. And also still some questions on accounting, etc. But the market does not price that in. The market simply says, hey, Nvidia is the golden child. And that's the way we want it. It's not just a $5 trillion company. It's going to be a $20 trillion company, et cetera, et cetera. We're not going to mind that China has their own. They don't need Nvidia chips. We're not going to price in Google with their TSU. Nope. Or the fact that Microsoft has micro LED, which doesn't require massive compute power, very, very energy efficient, and also makes the GPUs obsolete. It doesn't need it. So none of these arguments are getting priced in to the analyst sales estimate growth and the earnings beat. So the market train continues on this Nvidia euphoria, but it's still euphoria. Anyway, we're just getting a little profit taking here. If we break that 194, then you'll see the Qs also get rejected at that 213, which they're doing on target as VIX comes into that 1929 line in the sand, tags it perfectly and bounces. The bounce in Nvidia that caused the VIX crush that has now petered out about 613, and the 67.64 SPX that I gave actually on Monday. So we're right there. The next rollover would be 67.30 if we're going to get it in SPX. In the meantime, it is Friday. Oh, thank goodness, right? All right. So we got a little busy yesterday after I closed my trading room. And this is what happened. Just a little review. We obviously had Nvidia beat and raise, but there are some questions. They're always got to be lawyering this trade, the bullish and bearish. And algos weren't really the reason, I think, for this sell-off. I think this was preordained. Anyway, those calls got absolutely annihilated, long story short, into options expiration tomorrow. And VIX dropped right down perfectly into that 1929. It actually hit 1928. You know, this is my major line in the sand. Anyway, the next hour, it did this, and then it followed through, and it pushed all the way up into this high of 28.27. So it was a perfect bounce pad, trampoline. Anyway, you can see we had a very large bullish engulfing on the daily. You already know I'm very bullish on the VIX and tail risk, and I've been writing about it a lot. So what I did was basically say, ooh, this is perfect. This is really, really nice. And Nvidia just so happened to start to peter out, and it was 194. You can't see it perfectly now, but yesterday it had a nice formation of after hours. And then I said, it breaks this 194, it's going to be a short. And so it did. So long story short, it was a really, really gorgeous breakdown intraday of 194. It overshot, by the way, but that's after hours and pre-market. But here's what it looks like on the daily. Very, very big bearish engulfing, came perfectly down into where it's been before. And basically the same thing with the SPX. We've re-tagged 6650 a few times now. And the more they weigh on it, the more likely it's going to break. Now, we might have a little bounce right here, 181.5 pre-market, but this is important. It did not repeat, did not get above that 200, which I had already said I don't see that happening this year. But more importantly, it gapped up perfectly into resistance, this lovely little Nvidia candle on 95.62. So the fact that the trigger was 194 intraday, but the resistance was 195.62 on the weekly was just gorgeous. Anyway, it was a nice reversal, and VIX, of course, was a shockingly motivated move, but this was it. I had given very specifically SPX 67.64 as the upside, and I did that on Monday. So there's a Keltner channel here on the weekly, because you know I always go from the outside in. Anyway, the fact that it was coming back in, all we needed to do was break this 6,700, and we would, that's why I gave 65.32.65 as a level. It's also the 21 week. So it happened obviously intraday, big turnaround. We had a shocking, for some anyway, 3.47% intraday reversal for SPY. We had a 4.57% intraday reversal for the Qs, and it was perfect. It literally hit that 67.64 and got rejected, came right back inside. That was the trigger short, 67.50. And then I said, if it breaks 67.30, remember that, it's going lower. So that was the VIX goes higher and the SPX goes lower, and it's already inside the Keltner starting to roll over. And so that's why I gave for this week 65.32. Did we tag it? No. Will we? Absolutely. So yesterday you can kind of see the low was 65.34. So not a lot off, but the point is likely this little bounce that we get today at some point we're going to go revisit. But that was a perfect kind of example of coming right back in and close to the 100 day. Lots of stuff today, by the way, is bouncing off this 100 day, but they're mini bounces. And this is why I said I don't really trust it. So what is even nicer for bears, and it's going to be this chop, as I warned, into year end, you get this left shoulder forming, you got this head forming. We can have a few weeks of this. I have a few more weeks of this basically flattening out and going sideways, and then we get to see what it's made of. Big a picture, the trend still isn't busted, the 10 and 21, but the very energy of this going sideways is going to cause these lines to flatten out and then roll over. So that's why I posted yesterday, December, we still have risk. So this is definitely why I still see being very, very risk aware. And there are reasons for that. This is the stuff that I wrote about. But we haven't even had CTAs kick in yet. Very, very nice. We haven't even had vol control funds kick in yet. So what we have is this sector rotation and then bouts of volatility. It's very big, tail risk building for all the things I talked about and wrote about. So missing the jobs report is not cool. And then we've got about Fed consensus right now is required for a rate cut. People are very confused about that. Even if the unemployment rate was pushed higher, it doesn't matter. They're going to, even Lori Logan out this morning said, would find it difficult to cut again in December. Inflation is too high, and the labor market right now, according to the data we've gotten, is roughly balanced. October rate cut not warranted. So the market's pricing out the fact that a rate cut is not a fait accompli. Japan has a Fed problem. I talked about that yesterday at length, and I wrote about this. They're inversely. They have this symbiotic relationship, and it's yen is cheap to finance the NDX calls and the treasury short. This is an unwind that can be violent, and this could trigger again in December. Fed doesn't cut, BOJ has to raise the rates, and the yen would then get a bounce of size, potentially upsetting the apple cart again. So this is all kind of coming together, honestly, for more risk into year end than a Santa Claus rally could defend. But we'll see. Right now, lots of write-up also I have been given on individual reasons for this concern. But basically, the fact that we have Fed rate cuts are getting priced out. Nvidia, nervous bull bulls. And then, of course, end of year drama with Trump presidency and whether or not he's going to be lame duck or not. I think those are some really, really key reasons. In the meantime, let's go look at the heat map because this is the market we have. It's very tradable if you're active, very active in it. So yes, the Qs, just long story short, did come back down, or I should say got rejected at 613 perfectly and did come back down to the 100-day. SPX almost came down to the 100-day. So we still have 100-day very, very helpful levels. Hood absolutely finally filled that gap. Remember, that was a high conviction short, and Hood, I said, it is not a question of if, but when. It's going to come down to this 106. It took 3 weeks. So recommended this because it was a gorgeous evening star reversal on a monthly, and it was up here. And I said, okay, we come back in 143. We're going to go down to this 118 level and then 106. We could overshoot even. And right now, that is exactly what we got. A perfect evening star reversal into month end. And the same thing I said with app. This thing's going lower. That was rejected. Come on down. And so let me put it on a weekly so it's easier to see. Look at that. We're not even there yet. So this 511 has been my call. High conviction call, and we're almost there. We'll probably overshoot to 508. Point is, lots and lots of levels I gave, and one of them was this SPX 6532. It's not a game of perfect. It hit yesterday. We're having a little bounce, but big picture, I think that's working. So hit me up in Zoom Q&A if you have particular questions, but I think for the most part, we had our tail risk bid. It is not looking like it's done, however. Remember tail risk in this Bollinger Band? It does not look done. Nope, I would tell you if it did. I really, really would. Anyway, that's it. We've got a sentiment. I've written about this. Sentiment has turned. Buyers walked away. Air pocket of risk. All these terms that I've used. In lieu of sector rotation, there will be volatility, blah, blah, blah. But it's a dance. It doesn't usually go straight down like it did with SDNK. Look at that. Is that gorgeous? I mean, that's just beautiful. Okay, so these are still working. These are still working their way down. Micron, whoever asked, is it a good time to go long? And I said, nope, wait until it's done. This reversion to the mean. At least it's back to the 10-week. And this was the only sector that hadn't really reverted back down strongly, and Seagate. So those are some pretty good plays. Let's go take a look at the intraday just to get a little bit of a view. And remember, this is the Mag 7 ratio, even though we have Apple and Google hanging up there, and those were the most bullish charts, and I've given you still higher price targets for those. This is a very large bearish expansion candle on a monthly. I think we're going to have this, as I mentioned, kind of go down here, up, and back down for the new year. I think 2026 might not be as bullish, run hot mindset. I don't think so. I think we actually have big dangers ahead.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.